Good day, guys. I hope we are all good. I hope we are all learning. I hope we are all being profitable. It's 2024. It's the year for everybody to be winning. So I'm back with a Candlestick Trading Bible. It's been a while. It's been a minute since we did the last few pages. So I'm just going to resume and we're going to finish this book and we're going to push to do as many books as we can this year. We're now back in action. So thank you so much for joining. Thank you so much for going through the previous couple of pages. I hope you're getting some information. I hope you're getting some knowledge. So let's quickly get into it. So I'll be toggling between the book and my MT4 and sometimes trading view. And wherever there's questions, you can always raise me up either on the comment section or on the Telegram group if you're in there, or on WhatsApp if you've got my number. So let's quickly continue. I think our last page was 119. So we're going to start on page 120 with the Candlestick Bible decoding. Okay, let's go. So how to trade the engulfing bar with Fibonacci retracement. That's the current topic. Traders use Fibonacci retracement in different ways. However, the most important Fibonacci retracement levels are the 50 and the 61% Fibonacci retracements. Knowing how to use this tool in conjunction with Japanese candlestick will definitively maximize your profit potential. Please be with me. English is not my first language, so some of these words I might struggle to pronounce or I might pronounce them in a weird way, so please do be with me. So the main important point here is I'll try to also highlight some of the major notes as we read through, then you can just jot them down and make use of them in your day-to-day trading. So the most important fib levels are the 50% and 51% levels. Knowing how to use this tool in conjunction with Japanese candlesticks will definitively maximize your profit potential. According to chart technicians, the most major move retrace around 50% or 61% fib retracement. This knowledge will provide you with the ability to predict with high accuracy the next major move in a trending market. Okay, so take note, fib usually works mainly in a trending market. This strategy is very simple. You define a clear uptrend or downtrend, and then you define, I think we read this page. What happened here? Okay, all right, let's just continue. According to chart technicians, the most major moves retrace around 50% or 61% fib retracement. This knowledge will provide you with ability to predict with high accuracy the next major move in a trending market. The strategy is very simple. You define a clear uptrend or downtrend, and then you define major corrective levels by using Fibonacci retracement tool. If you see an engulfing bar pattern matching up 50 or 61% levels, it is powerful price action trading signal like we see in the chart below. So here we've got a 4-hour chart and it's on coffee, right? So this is a clean uptrend. How do you know that your price is in an uptrend? We're just going to do a quick recap. Price will just be creating higher highs, higher lows, higher highs, higher lows. As long as a certain high is broken and price creates a higher high, then the next low fails to break the last low. That's an uptrend for that particular time frame you'll be looking at. So looking at this, the last low, we've got a high here, we've got a low here, we've got a high here, we've got a low here. So from this point here to where price started to actually reverse, here there was a slight reversal, but just notice that there was no follow through, right? So you cannot use this as a high. But from this high here, then there was a follow through to the downside with minor structures being broken. So we now know, okay, higher high, higher low, higher high. We are anticipating a higher low, right? As soon as you start anticipating, you draw your fib. As soon as your price starts to retrace, you draw your fib. Then as the fib retraces, you wait to see what candlesticks will be painted on either the 50% level or the 61.8% fib level. All right, so as soon as you get either pin bar or bullish engulfing, that's your entry criteria and you'll be in that trade. So with future lessons, we'll start to jump into how you actually get into a smaller time frame, then look for a pattern in here. So for now, we're just going to go with the book, so that people don't get too confused. All right, in the example above, the engulfing bar price action signal matches up with the 50% and 61% fib retracement level. The resistance level that becomes support is another confirmation to take this high probability setup. This strategy is very powerful. Here's another example below that illustrates the power of the 50 and 61 fib retracement levels. So just going back to the top, after this high was set, when they say a support level was broken, sorry, a resistance level was broken and became support. So soon as we broke here, price still came into the same. So even if we didn't have fibs, this was already a zone which we were supposed to have drawn, and you can see price came and bounced, continued pushing up. So we're going to continue. So on the example below, this is an example of a downtrend. So price is pushing down, resistance. The fib is drawn from this lower high here to this lower low here. So we could have used this one, but again, you can see the follow through wasn't much here. Even if we had put a fib, let's say we had put a fib from this lower high to this lower low at that particular point in time, and consider this a retracement, right? If you run a fib here, you see that your 50 and 61 level would have been maybe somewhere here or maybe higher, and price didn't get there. So that is an example of an invalid retracement. So price went on to create another lower low here, which we then used, right, to calculate the whole down move, right? Then 50 level, 61 level, you can see when price go to the 50, we started getting signs of entry here, right? But then again, you need to have more confluences. You just don't use one confluence and you enter the trade. You need more confluences. You need timing of the week or timing of the day. Let's just check what time frame this is. So as your confluence, this is a daily chart. So there's many confluences. You want to check on what position of the week or of the month are you in to give your trade a high probability of playing out. So price started slowing down there. There was no follow through here. Slight extensions tapped into the 61, continued to push up. Then they gave another huge bearish engulfing here. So on this particular example, we want to be fair. A person could have taken this sell and they could have put their stop loss here. There's also nothing wrong with that. But remember, that's why we use proper risk. If you enter a trade and it doesn't play out, and you see that price is still giving you that second chance to re-enter, then you can still re-enter your trade. After this bearish engulfing bar, right on the 61% fib retracement level rejection, you can see the price then just melted. And bear in mind, this is a swing trade. Each time you see like this setups happening on H4, daily or any higher time frame, just know it's a swing trade. So they require more patience. It's different from day trading where you see a pattern and you quickly execute. Higher time frames require more patience as the trades take time to develop. So I hope that was a clear explanation there. Trading the market from 50%, 61 fib levels means you are trading from better price levels, right? As a result, you put as many probabilities in your favor as possible, and that will allow you to become one of the most successful traders. Trading the engulfing bar with trend line. So before we continue, let's just quickly jump into the charts. So we need to see examples of this actually happening. We need to run fibs. We need to look for an uptrend or downtrend. Let's look for something which currently trading, which is in a clear trend. So this one is a bit ugly. Let's go to EU. I think I saw a nice move on EU. So we're going to go to Euro USD. This is a BTMM template. If you need it, it's for free. I can send it to you. This is Beat the Market Maker Strategy by Steve Mauro. If you want the template, I can send it to you, and videos on how to install it will be uploaded a bit later. So just be with me here. My platform or PC is a bit slow, so just wait for it to load up. Okay, so EU on the 4 hour, you can ignore these funny butterfly colors here. Let's just look at the trend. So from what we've read so far, we want to first agree that we've spotted a trend. Okay, so from this peak here, price starts to create minor highs. We haven't broken this high yet, remember. So until we break this high, we're not sure whether this price is pushing up, right? But intraday, you know that price is creating visible higher highs, higher lows, higher high, higher low, higher high, higher low, higher high until they break here. So we know for sure that we are in an uptrend. So this low wouldn't have been so clean. So I'd rather use this high, this low, this high, this low, this high, this low to explain this price action. So what are we looking for? Soon as we define that price is now pushing up, we break this high. We want to see where we can first put our fib where it's clear for everyone. So okay, so let's agree that after this high, that's where we say okay, prices is an uptrend, right? We're now looking for buys going forward. So this is coming into this week, which we are currently in. So what we're going to do is we are going to mark the high, which was this one. All right, we are going to, okay, if you find it difficult, because this price action might confuse people, if you find it difficult to mark the highs, there's nothing wrong with switching your chart to a line chart so that you can just pinpoint the high parts or the high zones, or you can pinpoint the trend as it moves. So this qualifies as a high here before this low was created. So we're going to keep it simple, like I said. So we've got a high, a low, a minor high here, which I wouldn't really want to make use of, but it's a high either way. We've got a higher low, higher high, higher low. So once we've defined our high here, remember we've marked this high. We're anticipating price to pull back to create a lower higher high. Let's see, higher high, higher low, to create a higher low. Okay, sometimes these terminologies confuse me. So soon as we have this price action, we want to mark a fib from where the price started, from the lower low part to the high part. So we're going to look for a fib. There's the fib, this is the lower low, this is the high, right? So if you notice from this low to this high, let me just double click because I'm going to remove it. I hope it's visible for you guys. So from this low to this high, price starts to retrace, right? We are now looking for a lower low to be created. Price comes and bounces off the 50 level right here with a nice pin bar or a doji candle here, followed aggressively by a huge bullish engulfing. So if you're confident with the setup, if you're confident with knowing where your trend is, as long as you get your reaction within the 50 or 61.8, you can take your trade. Yes, price can still extend the low sometimes and take you out depending on where you would put your stop loss. Yes, that happens, but again, that's the reason we use stop losses, right? So from here, you can see price gave a nice candle as a signal right on that area, and it's also right on this broken zone here, which is now a support zone. But this example, it's not a clear support zone because you see price spikes slightly below and they come slightly below as they come to these fib retracement levels. So that's one thing I would love for you guys to note. But if you entered here or whether you entered here, this trade still played out nicely to the top side all the way to the next quarter point level there, which was 1.08750. So what are we looking for? We're just looking for opportunities. You don't really have to catch the whole trend. You're aiming for 1:2 risk to reward ratio. You're aiming for 1:3 or even more, just depending on your trading style, depending on what time frame you enter your trades. But it's always good to mark these levels on H4 and the daily Then when you drill down to the smaller time frames, it becomes a high reward setup, right? So for example, after seeing this, we could have dropped down to the edge 1 or M30 or M15, even M5, depending on what type of trader you are, to get an entry before the price even shifts. So imagine if this price shifts while you're in the trade, it means by the time this candle closes, you might be done. You might wait for price to hit the next zone. You also get some good rewards. So this is one example of a buy trade. Again, the next low was this one and the next high was this one, right? So we want to run a fib again to see if this guy writing this book is giving us correct information. So from this low to this high, right? What do you see here? So I hope this color is visible. I'm not sure if I should make it black, but you guys should let me know so that when I continue doing the next videos, I can change this fib to black maybe so that it can be visible. So I hope you can see it at the moment. Let me zoom in. Okay, so I ran our fib from the lower low to the high, then price retraced. Again, what do you see? This is the 50 level, this is the 61 level. Soon as we touch the 61 level, we rejected with a minor, or how do I put this? How do I put, with a variation of a pin bar candle, right? Then the next candle here, we didn't get a bullish engulfing, we got like an inside bar. And I don't remember if we've mentioned inside bar yet, but that's an inside bar. Price is respecting the 50% fib retracement and the 61.8% fib retracement. That right there, ladies and gentlemen, is our cue to enter. And if you're using sessions, this was during the London session going into New York. Good trade. This was actually yesterday. So just to show you this trade, I'm going to quickly so I toggle between using MT4 and using trading view. So if we quickly jump to trading view, you see Euro USD, you see there's the trade there. Even though it didn't reach here, I was just reaching. This trade was a good trade. Usually our risk is 1 to 3. So as long as we get 1 to 3 on a particular trade, we call that trade a success, right? So it depends on how you mark your trades, what you're looking for. But the trades you can see, whether you've got moving averages or your charts are clean, the trades are there. This was the first one, I think. The first one I marked with that retracement 1 to 3 played out clean in a period of what, 1, 2, 3 days. The next trade would have taken 1, 2 days. So roughly on average, if you are day trading, guys, this is a free tip I'm going to give you. If you're trading, allow your trades to play out for at least 2 days. So if you're using prop firms, also allow prop firms which allow you to hold overnight. But holding your trade for at least 1 to 2 days allows price to expand without you rushing it. It allows the price to just play out the way it plays out. So that's one thing I wanted to quickly share here. I don't know. Let's see if we can drop another example, maybe on a downtrend. What has been on a downtrend? Have I noticed anything on a downtrend? Yes, I have. I think was it Nasdaq? Let's quickly check Nasdaq. I want to look for something with an example which we can use. Okay, Nasdaq was pushing down on a smaller time frame. Let's see. I want a clean, definable downtrend. Anyways, let me also try to incorporate the current price so that you see how to approach these markets. This was a nice uptrend on this particular area here. So here you could have started using your fib maybe from here to here to, and this is not a clean high, here to here. This was a deep retracement. Now price is already retracing. So if this is the high and this is the low, I want to run a fib there. Let's see if this is going to play out. And pardon these lines, these are just quarter points. So if you are on indices, there are too many in such a way that the charts might not be visible. So just excuse me for this particular example I'm using. So I'm going to jump on the fib, top, bottom, and we want to explain this setup. Okay, so let's say indicator has shown us a peak. This is the low. It's not yet clean though. That is a downtrend. That's the only reason why this setup might not have played out, right? Because we don't have a higher high, lower high, then a lower high, lower low. We don't have it quite as such here until we look at this. So this becomes the high, this becomes the lower high, this becomes the lower high, this becomes the lower low. So it looks like it's a slow channeled downtrend, which is taking like 2 weeks to play out. So it's just a variation, but let me see if I can just use this example. So from this high to this high, the only reason this area wasn't really respected to our expectations is because the downtrend is not yet defined. So already I'm showing you a variation where this particular strategy might not work. So initially price actually respected the zone. If you're trading New York here, day trading, you could have caught some pips, because if you're trading Nasdaq or indices and you catch 100 points either on Nasdaq or US 30, that is a big trade for a day trader. So this could actually been good, but then the confirmation only came here when we got that bearish engulfing. But again, no follow through to the downside. So this particular example, price definitely would have taken us out. But after that, they eventually dropped. But I wouldn't want to use that as an example. So again, for very volatile pairs, I would love to use the H1 also, because if you look at it, there is a trend in here. So if there is a trend, that means we can trade it, right? So let's see if from this high, which was around Friday last week, if we could have taken a sell. Let's drop down to H1. Now we're using confluences just to line up the fib and get a setup. So let's scroll back. Okay, right. So where's Friday here? Okay, this was the high on Friday last week. Huge move down. We've broken a few structures. Price retraces. So from here, depending with what you are anticipating, if you're anticipating a sell for some reason, you can still run your fib. So let's see if this is going to be a good example for a fib. I'm sorry I'm taking a bit of a long time to explain this particular concept, but I think it actually works in our favor if we take more time. So if you notice, after that push, price came to the 50 and 61 level. Okay, this other fib which we drew is confusing us, but anyways, that's the zone, the 50 and 61 level right there. They gave hanging man inverted pin bar, then a bearish engulfing, depending with where you enter. Again, if you're day trading, I love to trade during your kills on times or your session times. This here was the heat of New York. So you could have, if you were anticipating a retracement and you see these candles, before they shift, you already be in the trade. So as price continues to drop, this is such a bad example, because I'm really struggling to even see the example. So let's go to H4. Let me go to another pair. I need to at least show you guys another clean example. Just that these days I'm limited to what I trade, so I don't even know what these other assets have been doing. Let's just look at GA. Let's look at GA, see what they have. Okay, GA. Hey, the price action there. Not so clean, not so clean, not so clean. Okay, I think we've got something here. But where was the peak though? Peak not so clear here. But anyways, this is the 4 hour. And we want to agree that after these levels we broken, this is also from this high, we can agree price is creating lower highs, lower highs, lower highs, lower highs, lower low, lower low here, right? We are waiting for this level to be broken to know that we are definitely in a sell. Soon as they break here, fib has to be lined up from this point to this point after you start seeing this retracement, right? So let's line up our fib. Let's see what we have on this particular example. So the lowest low is somewhere here. Double click so that we delete. Perfect example. This is a broken zone, which is now a resistance. So everything is lining up now from the book. We are on the 50 to 61 level area. We've got nice price action respecting a zone and rejecting a zone which was broken, which is now what, a resistance level. So this is a resistance. It was a support level here, but it was broken, retested. We've got a fib. So everything lines up, and this trade just melts all the way. Again, this is a training trend. If you can mark this from a high time frame, guys, let me tell you something. It's not every setup which is going to play out as you've seen. Sometimes the setups will be ugly, sometimes they'll be clean, sometimes they'll be perfect. Even you would doubt them the way they'll be perfect. But at the end of the day, is if you catch a setup on a 4 hour or daily, it becomes a swing. If you're day trading, you aim to catch, look for another retracement, you catch your trade retracement, right? So we agree that this actually played out here. This is a good example of a sell after we got a retracement into the 50 and 61.8% fib retracement level, and also a resistance level on H4. So that was a good example. It's not always that the price will happen or that the setup will happen. You have to actually go through your watch list and look for these things. But again, they also happen on all time frames. You just need to know what you will be looking for. So I'm going to quickly jump back to the book. Let's not waste time. Okay, I just came to my YouTube. Oh, okay, where's the book? All right, there we go. All right. All right, trading the engulfing bar with trend lines. Personally, I really use trend lines in my trading. But for the sake of going through this book, I'll try to look for examples where we can plot some trend lines and see if we can get some setup. So again, we are mainly focusing on the engulfing candlestick, right? Trend lines give traders an idea about the psychology of the market, especially the psychology between buyers and sellers. Moreover, it allows professional traders to determine whether the market is pessimistic or optimistic. This technical trading tool is used in different ways, either as support and resistance, by drawing them horizontally, or to identify price and time by drawing the trend lines vertically. There is no wrong way in using trend lines. That's one thing you need to note. There is no wrong way. I've read other books where they will tell you that if you draw this candlestick this way, it's wrong. The bottom line is you need to understand what you're looking for if you put your trend line. That's all I can say on this topic. In trading markets, we simply use trend lines to highlight a trend by connecting swing highs and swing lows in price. This way helps us find high probability entry setups in line with the general trend of the market. Already they're highlighting trend lines mainly work in a trading market. I'm just going to give a quick illustration. If price is pushing up like this, we've got 2 points. These are high lows and high highs, right? High highs at the top, high lows at the bottom. So once I know that I'm in an uptrend, there's now high probability that if price comes and taps a third time, since I'm in an uptrend, my probability of buying becomes high, especially on the third touch. Fourth touch, yes, can play out. Fifth touch, yes, it can play out. But as the trend continues up, the probability of those touches playing out becomes less. That's from my own analysis through time and screen time and just watching. So let's see the illustration below. GBP USD 4-hour time frame. We've got a higher high on top here, right? We've got a low here, a lower high here. So initially the trend line was like this, right? Let's agree on that. We could have drawn a trend line like that because we had a high, a lower low, a lower high, lower low. But once it violates here, if there's nothing supporting a sell, then there's nothing. So you notice that price creates another high here. Then you can draw a fresh trend line, right? So don't get too married to a certain trend. Be flexible because price can do whatever. We can put a trend line, it can be violated, for example, here, and they created a new lower high here. So it's a new trend line which we are drawing. This becomes invalid. So be flexible to just follow and flow with the price, whatever it's doing. So again, we still know that we're in a downtrend. Why? Because price, after creating this lower low, they still created a lower low here, right? We have a trend line. Price pushes up, pushes down, creates another lower low. We might consider this a lower high, but in our mind, we know that there is what? There is a trend line here. So usually you see, depending with how long you've been trading or what groups or trading communities you in, you might see people start buying here because this high has been broken. It's valid for them, but in hindsight, you should know that if you've got a trend line, it's guiding you to know that, you know what, wait a minute, maybe I want to buy here. What if this price hits here, then comes down? Because remember, still we are flowing down, right? This is just minor. Until we get a higher low here, then this trend is still pushing down. So you can see on the third touch, what do we get? The main emphasis is your candles. You should know your candles. Once you get here, price slows down initially, right? Secondly, it creates this candle. I'm not sure the name of this candle, but I just call it a double-edged sword. This is just a personal name I use. If you get a candle like this with fairly equal wicks, especially when price was coming up, chances of the price coming down are high. I want you to big test this on H1. I want you to big test this on H4. I want you to big test this on the daily. I want you guys to prove me wrong. If you see this, you just need to be familiar with the candle though, because sometimes you might spot one which is not. But usually when you see such a candle, price will reverse. First sign was the price slowing down. Second sign was this candle. Third sign was the engulfing, the bearish engulfing bar. We are active. What are we targeting? We're targeting this low. If you use trend lines on both sides to create a channel, then you target the bottom side. That's it. You just have to try and keep it simple. Once you start seeing it get complicated, just know something is wrong. So that's a good illustration there. By connecting the extreme highs, we had a trend line that acted as a resistance level, and the formation of the engulfing bar pattern shows a good selling opportunity. If you use just horizontal support and resistance, you will miss this profitable trade. So that's why I'm saying be flexible to know that price is fluid. It can do whatever it wants to do. So just keep an eye on your candles, on your zones, and you trade what the price does. Learning about how to draw trend lines is never a bad idea because it is the simplest analytic tool that you can use to analyze financial markets, and it works in all markets, whether it's forex, commodities, futures, or options. All right, this is an example of uptrend. All right, we didn't say anything about the illustration, so let me quickly explain it by how I know. So from this level, we want to agree that this is the lowest low here, a higher low, a higher low. Price is starting to push up. We might run a fib here. After we run a fib, there was no retracement to the broken zone, no retracement to the support zone, thereby no entry. Let's agree. Price continues to accelerate. Let me confirm what chart this is. Okay, this chart has no name or time frame. Anyways, price pushes up aggressively. This is what we call price acceleration. When price pushes up so much with no visible retracements. If your trend line is too steep, if you see a trend line being too steep, just don't put a trend line. A trend line must at least slant at a normal angle. If it's too steep, just know that no, there's acceleration. Usually such trend lines don't work. Right, from this low, right, the second touch was here. We cannot draw a trend line like this. This is just almost vertical. So this is an invalid trend line. But from here to this point, it's better. I'd rather prefer maybe something like this in this angle. That's also perfect. But from this book, you can see the author used this angle, this level, and this high low there. From there, we know we're still in an uptrend. What are we anticipating? We're anticipating a third touch. Anytime a third touch happens, Whether we've drawn a fib, whether we've got a moving average, those are all confluences which help us decipher whether we are going to enter a trade or not. So we get a nice bullish engulfing, we are active in the trade. So you will notice as we proceed now, my explanations are a bit more, because during the time I was away, I was getting more info, getting more knowledge, getting more screen time. So please be with me. The longer these videos will be, the more the knowledge I'll be dropping. All right, so we're going to continue. The chart above shows a bullish trend. The trend line acts as a support level. The price action signal that occurred created a great buying opportunity. All right, how to trade the engulfing bar in sideways markets. What are sideways markets? One of the most difficult markets to predict can be the sideways and ranging market. This is one of the most difficult because usually you might feel that price is reversing. At the same time, it will just be ranging. Okay, so I always recommend traders to focus on trading trending markets. But the problem is that the market spends more than 70% of their time in ranging motions. That means if you don't understand a ranging market, you should take 70% out of 10 trading days, 7 days, the price will be in a range. If you get confused by a ranging market, it means 7 days you're not trading. But when your market starts to trend, that's when you should be on top of that and you should be killing it, right? So if you focus on just trending markets, you probably leave a lot of money on the table. This is the reason why learning how to approach range bound markets is a must if you want to make a decent living trading financial markets. What is a range bound market? When the markets stop making higher highs and higher lows in case of an uptrend, or lower highs and lower lows in case of a downtrend, the price starts acting between specific high price and low price. This is a clear signal that the market is ranging and no longer trending, right? So this whole point, you should actually highlight it. So this is an example. You can see this price is not going anywhere. It's just in a range. Support, the top part is your resistance, the bottom part is your support. All right, as you see in the example above, the market is trendless. It is trading between horizontal support and resistance, and you can't apply the same techniques you use in a trending market to trade engulfing bar patterns in range-bound markets. Again, when you go to war, when you go into a terrain, wherever you're going, you cannot just go with a rifle. You're going to need a rifle for certain targets. You're going to need maybe a pistol for certain targets. You're going to need maybe like a bazooka for certain targets. So learning all this sort of allows you or makes you flexible to adjust the way you approach the market or the way you trade by knowing what to do after you see what the price is doing. If it's trending, you use a certain tools. If it's ranging, you use certain tools. All right, so that's the main point which is being illustrated here. Let me give you an example. When you're driving your car, you don't always drive the same way. If you're driving downtown, you try to drive slowly because you know that driving fast can put your life or others' lives in danger. But when you're driving in a highway, your driving style changes completely because you know that you can drive fast. So you always try to adapt your driving style to the appropriate situation. You have to do the same thing when you're trading. This is just like an example to the same war thing I was talking, like having a different arsenal of weapons when approaching certain different targets. You have to do the same thing when you're trading the engulfing bar pattern, because all price action strategies we discussed before will not work in range bound markets, and you have to use the right techniques that fit these market conditions. Before talking about the right way to trade trendless markets, you have to be selective about trading range bound markets to protect your trading account, because not all sideways markets are worth trading. Take note. You have to know how to differentiate between sideways and choppy markets. See the illustration of a choppy market. A choppy market is a market whereby there is no clear defined high, there is no clear defined low. For example, here you can see this high, then this high, this high. Almost looks like it's an uptrend, but then it comes down, then comes back up. That's choppy, and we mainly, once you see price doing that, you don't trade. As it is illustrated above, the market trades in a crazy way. We can't identify major support levels and resistance. You have to stay away from these types of markets. Otherwise, you will definitively damage your trading account. Trading the engulfing bar candle in range-bound markets is very simple. The first strategy is going to be about trading this price action pattern from major support and resistance level like we see below. So the main thing is, okay, let me not get too ahead. From this chart, I'm just going to talk about what's on the chart. From this chart, we have a high, we have a high, we have a low, a low, or a broken zone and a retested zone. So now we have got a range to work with. Although this market, I'll say, looks almost like it's choppy, especially when you get here. This top pattern remains a point of interest for you to get a candlestick which you can recognize. That's the whole point. When you get to a point of interest, you want to get a candlestick which you recognize. When you get to a point of interest, you need a candlestick which you recognize. That's the whole point. All right. So continuing with this, the second strategy is to trade the breakout of the range or to wait for the pullback. So the first, we're trading within the range, right? Then the second strategy is to trade the breakout of the range or to wait for a pullback, as illustrated before. So on breakouts, again, you should know they can be fake outs. A fake out is a false breakout whereby a price breaks out of a high, but then comes right back below. Then a clean breakout is when price actually breaks out, then uses that same level as a retest and continues, going the other way. The third strategy is to trade a false breakout of the major support or resistance level. I think it's illustrated before there. False breakouts are one of the most powerful price action strategies. It occurs in all types of markets, and if you know how to use it in combination with the engulfing bar pattern in a major support level or resistance, you will make money in the market because you buy intelligently the bottoms and sell the tops, keeping it simple, right? This is the same item illustrated above, same as below. Okay, so let's go to the charts. Let's go to the charts. Let's go to the charts. We want to look for an area where price was ranging. This looks almost like it, although the range is too tight. Let's see if we zoom it in, if it's going to be clearer. I want to see if I can use this part here. Okay, this looks a bit explainable. Let's see though, let's see. So we're coming from this high here, we create another high there. This is not too clean, so I'll use this one and this one, then draw it into the future like this. Then I'll use the bottom. Not too clean, man. This is not a clean example. This is not a clean example, but let's see if we can use it, right? Let's see if we can use it. So we've got a high here. Price comes to that same zone, right? Bearish engulfing. We're looking for shorts or sells. Price sells, but the thing with, again, with ranging markets, you need to know where to exit. Sometimes price will come, for example, right here. It stopped before the zone. But do you notice that we have the 800 EMA there? That's your sign to take profit. Okay, if you're in the sell, that's your sign to take profit there. Even though this move is not too big, let's see, though, if you entered at the close, how many pips? This was actually a 50 pip move on GA in November, 50 pip move. So that's not bad. Day trading, 50 pips is a lot. 30 to 50 pips is perfect. Okay, so price comes to the bottom. We don't have anything to use for buys, right? Comes back to the top, slows down, gives us a fake out, right? And they give another bearish engulfing candle here, this one here. I think this would qualify for a B. I would love it to qualify for a bearish engulfing candle. But on this particular one, the only thing I don't like is the retracement back into touching the zone. But again, you should know, guys, price will never be perfect. Price will move how it wants. You just need to know where to put your stop loss Sometimes maybe that pullback could take you out, but what happened after it took you out, price then actually went all the way to the 800 EMA, all the way to the next zone, gave a breakout, showed signs of continuing, but then came back up aggressively back into the range. So these are all variations. Nothing will be perfect. That's all I want to emphasize. Nothing will ever be perfect. So let me see if I can get another clear as well. So this, the only thing I could explain here is this fake out. This fake out here, a nice bearish engulfing. So depending with how you view price, it's always nice to get in before price shifts, but it's also nice to get in after you get a confirmation. But after every move, just know there's a retracement. For every move, there's a retracement. It might be big, it might be small, but there is a retracement. All right, so that's that. Let's see if we can get another example on GA. Nothing ranging here. Okay, I don't see anything ranging here. Let's jump to GJ. Just going to go through random pairs, and I'll try to use price action which is as close to the current date as possible. So nothing clean here, nothing ranging. Okay, lovely uptrend here. This one looks like it's like a ranging price action because we had two equal highs here, two equal lows here. We've got a range, but there's no third touch. Let's see how it continues. Let's see how it continues. Maybe I can use this example to quickly explain something. All right, so what do we notice here? We notice two highs, right? Two equal highs. So as soon as you get the highs, just mark your chart. It's your chart. Mark it so that you can be able to trade in the future. If you mark it, it doesn't mean the trade is coming in the next 5 minutes. Trade might come in the next 5 days or in the next 5 weeks, depending on where you marked. So do not hesitate to mark your charts, because trust me, all the zones you mark, they're going to be of use at some point. Trust me on that. So we've got this bottom zone here. So we've got these two highs. That's what I used, this one and this one. And we've got this low and this low. So until we break out of here, we are in a range. I'm sure if you go through some of my sessions, even outside of the Candlestick Bible, you hear me talk of ranges, saying I won't trade maybe until price breaks out. Because sometimes when price is inside, it's unclear, it's undecisive, it's choppy, right? So here we've got a nice bearish engulfing on the second touch. That's an entry. That's an entry point. Where do you take profit? You can take profit on the bottom, or you can take profit on the moving averages. Guys, if you're trading towards the moving averages, always scale out. At least scale out your trade when your price hits a moving average. Right? We've got the 50 EMA, the 800 EMA scale out points in the next lows, which we're here. And we've got a quarter point here, 180,000, which is where price got and stopped abruptly. They couldn't break it until we came here, right? We agree. So that's a clean example of a sell. Price comes to the low, they don't tap. They come, then they tap with the pin bar. Where's the bullish engulfing? Cleaner setups show you a bullish engulfing right within the zone. This, I wouldn't call this clean, but I would take it because they are trading around a quarter point zone. Stop hunt. As your confluences line up, as your reasons to take the trades line up, you can still execute. Remember, nothing will be perfect, guys. Nothing will be perfect. There's more than $6 trillion circulating in a day. There will be a lot of manipulation. Nothing will be perfect, right? Let's agree on that. So when they come to the top, they give a nice dodge. This would have been a nice position for me to sell, and I would have sold this one right here. You sell here, ways you take profit on the moving average. They go to the 200 EMA, then from there they tend, they break out aggressively and retest. So where the book talks of breakouts and retest, that's what they mean. This is a clean breakout in the retest with a nice rejection candle there. So as long as you know your candles, everything will be a bit easier. So a break, then price continue pushing up. So I think we've touched most of the examples here. I'm not sure how long I've been going for. I also want to get ready for New York session today because that's the session which I mainly trade. So let me quickly round this up. Let's see how many more pages we can push before we conclude this session. So Candlestick Trading Bible. Okay, there we go. Okay, why is it refusing to show? Guys, I hope what I was discussing, you could see my chat there because I don't know what's going on. I'm failing to get back to the book. Okay, let's do this. Share, new share. Okay, there we go. We're back. Okay, trading the engulfing bar with supply and demand zones. I wish we could make this into an own topic on its own, but let's go through it. This is one of the best topics. If you find any book with supply and demand, read it. Guys, read it. Supply and demand, that's the magic there in trading. All right, trading engulfing bar. So take note, we've been just focusing on the engulfing bar mainly, but on different scenarios using the fib, using the trend lines. Now we're jumping onto supply zones. We're also looking at it on the ranging market. So now we are trading the engulfing bar with supply and demand zones. Supply and demand zones are more powerful than support and resistance. Take note right there. It is the place where banks and institutions are buying and selling in the market. If you can identify these turning points, you will make a difference in your trading account. Again, guys, let me also stress this. You don't have to use all the information in this book when you trade, because sometimes a lot of the information makes you confused. Try to pick only what appeals to you or what you understand best. Then apply it on the market day in, day out. Trust me, your trading will change. So to trade the engulfing bar pattern successfully with supply and demand areas, you have to be able to identify quality supply and demand levels on the chart. According to my experience, there are three factors that define quality in supply demand areas. The first is the strength of the move. All right, pay more attention to the way the price leaves a zone. If the market leaves an area quickly, this is an indication, right? This is an indication that banks and institutions are there. Take notes. Second is the good profit zone. You have to make sure that the level provides a good to risk reward. You cannot just see a zone, whether it's a touch on a trade line, whether it's a ranging market and there is a bearish engulfing, and there is no proper risk to reward. Like your risk is this much and reward is this much, and you go on to sell that trade. That's backward hustling. That's hustling backwards. So you have to make sure that the level provides a good risk to reward. At least 1:2. I always say 1:2, 1:3. Personally, this is my average risk to reward, which I look for when I'm trading. 1:3 on most setups. I rarely go above 1:3. Usually I collapse my whole trade at 1:3. But that's just a personal preference. You can choose 1:2, 1:4, or even more, depending with the type of trader you are, right? The third is bigger time frames. The daily and the 4-hour supply zones, supply and demand areas are the most powerful zones in the market. If you've been following me on my other YouTube videos, you hear me talk. Each time I talk about 4-hour, I'm looking for supply and demand areas only. So that's also a personal preference. I love to use the 4-hour to look for supply and demand areas. The chart below shows a quality supply area. Okay, let me also explain. Supply, when you are supplying something, these terms, when you supply, you are selling, right? When something is in demand, you are buying. So demand zones are buying zones, supply zones are selling zones. Then with demand comes support. So support zones, when we say support and resistance, when something hits support, it was falling and it has found support, so it's going to go up. When something is coming up and it finds a resistance, it comes down. So supply and resistance, we will be talking about sell setups. Demand and support, we'll be talking about buy setups. So just don't get those terms confused. So I just tried to explain them there. So the chart below shows the quality supply area. As you can see, the move was very strong, and that indicates that banks and institutions were there. The formation of an engulfing bar was a clear signal that the bears are still willing to sell from the same price level. All right. The formation of an engulfing bar. Right. So the engulfing bar, that's our main candle we're looking for in this particular setup. Right. So you open your charts, you see there's a huge move. Maybe there was a news event. The other reason we say, guys, sometimes don't trade news events. Just let price do what it does. If the setup is valid, price will trickle slowly back into the area, give you a nice confirmation, and you execute your trade and you take good profits instead of jumping into a trade not knowing whether it's going to buy or sell. You get it? So nice explosive move to the downside here. Price retraces, slows down, confirms with a nice bearish engulfing area in a supply area. You get it? So if this was a range, again, this is almost the top of the range. You see, all your confluences have to come in together. Then you take your trade. So after you see your bearish engulfing trade, if you want to wait for a slight retracement, that's up to you. But again, that's your sign to actually sell a trade. See another example of these areas, right? So price is coming down, we're coming down, we're coming down, we're coming down. We had a nice huge move here. Huge moves are seen by these huge candles here. Once you see like vector candles, some call them vector candles, right? Usually after you see those candles, that whole area there where the candle is left, or order blocks. Maybe others use the term order blocks. So don't get confused and think that it's a lot of things we're doing in Forex. If you're following YouTube videos, you notice each trader uses their own terms. But at the end of the day, especially if you've also gone through multiple courses, you see, okay, these guys are just explaining the same thing, just different names. So don't get confused or caught up in the names, right? So a nice supply area here. Price breaks. Oh my God, we missed the trade. We missed the trade. The trade is gone. Patience, 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 patience. Price comes back, hits us with a pin bar, followed by a huge bearish engulfing. Trade still continues to drop. Sell area. That's it. So again, supply and demand allows you to have the proper risk to reward. Because here you can just say, okay, my stop loss is outside the range. Simple, right? Calculate 1:1, 1:2. You exit here. 1:3. You exit here. Those who aim for 1:5, 1:10, they will still be holding. You would have collected your money here. If you risk 1%, you make 3%. If it's a 100K account, these prop firm accounts now. If it's a 100K account, you risk 1%, you know you're risking 1,000. If you've made 3,000, guys, would you say you want to continue chasing price after you just netted in 3,000? Would you continue chasing price? You wouldn't, because you would have made your fair share of the kill. You'd have taken your fair share of the kill here, and the setup would have played out. So I think that it's not complicated to identify these zones because they are characterized by strong moves. Take note, right? I think the secret behind supply and demand areas is that big players put their pending orders there. When the market approaches these zones, we see a crazy move from these levels. If you can combine trading supply and demand areas with the engulfing bar price action signal, you will increase your chances to make money as a trader. Okay, what's next? Okay, guys, let's end here. So let's go to the charts, look for examples. Then we're gonna jump into money management, the second session. Don't worry, guys, we're about to finish this book. We're going to finish it. As soon as we finish it, I'm going to ask you guys to list the other books you want me to look into and just go through. Maybe I'll say something which is going to help somebody, right? Even myself, when I read through some of the things, it also helps me personally. So it's all good. So we're going to drop into the charts and look for supply and demand areas. Then when we come back on the next session, we're going to look at money management trading rules, and that's where we'll start on page 133. All right, so we're going to jump, we're going to continue from here, jump into the charts. Okay, we're looking for supply and demand areas. Who recalls a day when we had news? How long ago was NFP? Or core CPI? Okay, let's just see. Let's look. I'm going to jump to EU for now. Let's see, man. Let's see. Pardon me. I'm not sure whether it's my PC or it's my network, but one of the two is slow. But just be with me for a few seconds. All right, EU. What do we have on EU? Okay, guys. I'm going to use current price. We're not going to complicate this. Do we agree that this looks like a supply zone? We need to agree first. Do you agree that this was an explosive push down? Once we agree on those two things, we mark the zone. Once you mark the zone, the next thing you do is wait. That's it. Keep it as simple as possible. So this is the 4-hour time frame. So usually when I also mark supply and demand areas, I prefer using trading view so that my chart doesn't get too clouded. That's why you see I use MT4N trading view. But anyways, you see price actually tapped into the zone early hours today or earlier today. We are on a quarter point. If we do get bearish engulfing here, we are going to sell. Why am I also selling here? I'm now just throwing nuggets, right? So let's quickly go to trading view. Let's mark this trade clearly. We might actually execute it and make profits. Okay. So if you notice, I've got a point of interest, which is this black line here. This is just another confluence I use, but I call this liquidity sweep. I was anticipating price to get up there because I know for sure there's liquidity there, right? But at the same time, we're saying, oh, it's H4. I'm like, why are these candles looking different? Okay, let's go to H4. But anyways, the liquidity concept is the same, doesn't change. All right, there's liquidity lying above this area, right? We need to agree on that particular point. Let me remove these. Okay, this has been a good week. Price has been flowing nicely here. Okay, we need to agree there's liquidity above this point. That's the reason I drew it, but that's another lesson on its own. What we're focusing on is a supply zone. Let me actually use this tool. What we're looking for is a supply zone within this candle. Price is already tapped into that area, right? So once price is tapped, we've been pushing up though, higher highs, lower highs, higher highs. So either price will retrace or price will reverse. One of those two. A reversal will be price tapping here and melting all the way here. So it will be something like this. Remember, I want to put my stop loss above the liquidity hands, right? So it will be somewhere there. Back to these lows. So this is a 1 to 5. Again, I told you I don't go for 1 to 5s. I'll calculate 1 to 3. If I'm going to take it as a swing trade, I'll calculate 1 to 3. Then I'll look to exit this trade maybe somewhere here. You get it, right? But what we can also do now, okay, first part is we've marked the supply zone. I want to refer to this chart in a few days to see how price played out so that I can explain in case it didn't play out, right? So all we need here to confirm that we're selling is what? Bearish engulfing candle. Price has already rejected the zone. That's a sign we're in the zone. We might get maybe price trickling again coming into New York session now. We might actually get the setup happening today. It's a Thursday. Remember, we started the week by pushing up, right? And price can potentially retrace to give us a midweek reversal. There are now so many confluences which we can use here, but I'll be so happy if price was to tap, excuse me, if price was to tap again into this area, give us a bearish engulfing on H4, we'll be in this trade. Other confluences I won't explain because it might confuse you guys, but trust me, everything I know, I'll be delivering it in different sessions. So this is a supply zone. This is where we're waiting for this price. This is the H1 view. London came and set the highs. You see, you drill down the time frames, you look for confluences. Okay, what's going on here? Price came, this was yesterday's high. We came, we tapped into a zone. Do we have a breaker block? You see, you're looking for confluences. If you're using the TDI like I do, you're looking for those confluences. All right, New York session will start just now. What might happen? Price might still attack today's highs, right? In New York session, maybe they might pass it a little bit, create a fresh pattern, and trigger us in our H4 supply zone, and we will be smiling straight to the bank before this week ends. Right? You see, we just try to keep it simple. So that's H4 supply zone, which I was just showing you guys. I got to be carried away there because there's now so much information which I can share with you. And I just hope this is helpful. It's not everything I say which is helpful. Sometimes I'll just be blabbering. But at some point, you pick something which is going to help or change your trading journey. That's the purpose of this session. So let's quickly go back to M4. Let's look for another example. So I tried to pick an example of something which is about to happen. So now I'm going to scroll back and we're going to look for something which happened previously. Okay, I was actually looking at this. Okay, sometimes price won't play out, guys. Sometimes price won't play out, especially maybe if it's a long time before price is retested the zone. So I want you to look at this area here. We agree price, there was an explosive push up here. This is a demand zone. Yes, price came into the demand zone. Yes, we had a bullish engulfing. Yes, price pushed up. If you TP at the 50 EMA, that's perfect. If you TP at the 200 EMA, perfect. If you TP at a zone you see, that's perfect. If you TP at a quarter point, that's perfect. There's no right or wrong, guys, in trading. You shouldn't like beat yourself up that, okay, maybe I entered, it played, but it didn't fully play out. I always say, take what the market gives, right? Take what the market gives. So I just want to see if here we've got this one was close. I'm not sure if you guys can see it. So what I'm just looking for is acceleration. Then before that acceleration, I mark a zone. So here you see I've got what? I've got a demand zone, right? Here they didn't really tap into it. They just created another pattern, but we were on a quarter point, guys. These are all confluences you need to use. Sometimes they won't get into the zone. Sometimes they might pass the zone a little bit, then come back up. You can still buy as long as you've got other confluences. This supply and demand theory is just like is a form of strategy on its own which you carry to battle. If you see it, you execute. If you don't see it, you might see something else, price respecting a trend line or something which we've read. You get it. So I'm just hoping these sessions help, but I just want to get one more clean. Okay. This is the 26th of September. I'm not sure if I zoom in, if I'll still be able to locate the 26th of September. Did I get it right? Or did I get it wrong? Okay, anyways. Right, we've created a low here. We've got a divergence set up. You see confluence is lining up this divergence. we've got acceleration. As soon as price accelerates, okay, I'm looking for an order block or a demand zone. There we go. These whole candles here, that's your demand zone. Once you mark it, you're waiting for your price to slide back into your zone. So such a setup for me, I love such setups. And you can execute with buy limits. When you're using supply and demand, guys, that's where buy limits work, pending orders. Buy limits if you're buying, sell limits if you're selling. The reason why is because you get what? Early entry. You get tapped in, stop losses outside the range. Check where the bullish engulfing close. Would you have bought here? Of course, you will be targeting maybe the 200 EMA, but buying here compared to buying here, what would you prefer? Obviously, you prefer buying here. It's better to take this smaller risk than to take this bigger risk. You get it? So use all that information to your advantage. Once you get tapped in, this bullish engulfing just confirms you're correct. Get a retracement, price continues pushing up. Where do you take profit? If you're trading towards the moving average, so here you could have scaled out here already because you're on the 50 EMA. Depending where the order flow is going, are you having higher highs, higher lows? The next zone would have been this high, because until we break this, we are not in an uptrend. We eventually broke it. We're targeting the 200 EMA or a quarter points right there. If you're on MT4, I can say you can even only put just quarter points on your chart if you don't like all those stuff which is on my chart. That's up to you. But guys, that right there is an example of a demand zone. Even though price was moving ugly, but you can see, what if you had entered there and you had held all this move? But again, that's being greedy. I always go for 1 to 3, like I said. If you get 1 to 3 here, perfect. Which is another example which we see here. Okay, I spoke about this one. Most supply and demands, if it's the correct one, it will work. If it's the wrong one, it won't. Do we agree, guys, that we've got... Okay, this is my last example. Do you agree that we've got an explosive push down? First, yes, we agree. Do we agree that price is rejecting the 50 EMA? Yes, we agree. So we are leaning on sales. Do you agree that price left an order block or a supply zone right there? Yes, we do agree. You just mark it into the future and you wait. Just like this. And you wait. Do we agree that this is quarter points? Black line, quarter point, 1.07500. Yes, we do agree. Right? Price comes, sell limits, active stop loss just above the quarter point, just above the supply zone. Take profit 1:1, 1:2, 1:3, or these lows, or this quarter point, or scale out at this quarter point. Nothing is wrong in trading, guys. As long as you see your setup, pull the trigger and execute. So price hits our zone. That's an example of a supply trade or a supply zone. This is H4. Nice push to the downside, even continued going down, making it a swing trade to be held for about 5 days. So this is midweek, this is midweek. So it's almost 5 to 6 days holding through the weekend. Okay. Do you guys agree that the candlestick trading Bible works? Back test it, forward test it. Mark your charts like we did with EU. We just mark and we wait. We want price to come into a trade. We want price to tap us in, and we want to make profits. And that's it. So right now, if we had a sell limit, our sell limit could have been active, and we could have taken that trade. So guys, let me not waste your time. This video, I feel like it was long. I'm not sure how long we've been going on, but I feel like it's a good start to continuing the trading, candlestick trading Bible. If you feel like the way I explained, I should put more charts, or I should cover more pages faster, just put your suggestions there in the comments, and I'll do exactly that. So today was just the first session of me coming back to continue to finish this book. Everybody who's been asking me to finish this book, guys, here you are. This is for us. I'm doing this for you. I'm doing this for myself. This is for us. So I hope 2024 will be the best year for everybody trading. I hope 2024 will be a good year for everybody reading. If you're going through this video right now, it means you are eager to learn, you want the knowledge, and we will make it. 2024 is the year. 2024 is the year. Anybody who doubted you, they will see the results this year. So guys, let's keep it moving. Let's keep it going. If you've got any other suggestions, questions, drop in the comments. I'll look into them. Template is available. You have to join the Telegram group to get the template, because most of the indicators or everything I use, I just throw them in there so that I don't have to keep looking for them if I want to send somebody. You just go in, you take whatever you need. I also drop some books in there as well. So yeah, guys, this year is the year. 2024 is the year. So let's resume. Next video dropping tomorrow 12 noon. All the other pages will be dropping 12 noon GMT +2 every day until the book is finished. Then after that, you guys can suggest which other books we can do, books which we can read like this, and also go through the charts and look for those setups. I'll be more than eager to go through them, because I know it's not everybody who trades the way I do. So if you've got something which you're using and you want us to look into it so that we can help you on your journey, guys are more than willing. So let's do it. Apart from that, guys, good trading. Enjoy your day.